Good evening and welcome to Options Center. It is 8/18/23. Welcome everybody. Been on vacation, so haven't put out too many videos. We are going to go through SPX on multiple time frames. We're going to check things out from the monthly all the way down to 65. Do some traditional technical analysis and also some Elliott wave counts, and then we'll go down to SPY and QQQ just to see what we have on the lower time frames and see why we're looking for a reversal, but we're just not quite there yet. All right, so let's jump into it. We have SPX on the monthly time frame. I go back all the way to the 20s on this time frame here. That's the 29 crash, where we have that trend line going all the way up to 2000, the tech bubble, and then into 2021, where we had our top. We have a channel within a channel that we're looking at right now. This is a monthly time frame. We had a major resistance point, and so what we've been looking for is a large move down. We got that, a back test, and then another move down at minimum. But we had our alt situation where we made our move down here. We might have had a ending diagonal. I don't think that's really happening. We got our reversal. We got a confirmation candle so far. The month has not ended yet, so we will be keeping an eye on that monthly candle. But so far we have a big red Mariposa type candle, cloud cover, whatever you want to call it. But we're getting a follow through after a topping candle there. So at the 786 retracement. So on this monthly time frame, it's real clean and simple. We're just looking to confirm this reversal. We're not going to spend a whole lot of time here. Let's go ahead and move down to the weekly time frame. All right, let's change the board on the weekly, and then we'll check out this this megaphone. So you see this rising pivot here in the turquoise. We came right back to that rising pivot. We are reversing off of there as well. So that also took place at this breakdown candle high and the 786 retracement. So all of that confluence of resistance and supply has given us our reversal. We think that we're going to make a lower low at this point. So I don't really have any alternative counts for the bullish side. We will keep track of any retracements and make sure that we don't bounce to the upside at any point, but we are continuing with the bear scenario at this point. So what do we have here? We have on the weekly time frame, we have lower highs, lower lows. We made a lower low here on this time frame and the monthly. And now we're starting to make a lower high. In order for this to be a lower high, you need another lower low. So it's not confirmed. It won't be confirmed for a very long time if we are to continue in a major bear market. So at this point, we did, just looking at the trend lines itself, we broke out from this channel, made a high, and now we're breaking that trend. So at bare minimum, we're starting to slow down this pace to the upside, and we're going to have to consolidate and retrace, like I said, at minimum. And the big area that we're really going to be pointing out is right where this 100-week moving average is right here. It's kind of this on the SPX. It's this 4,200 area. It's really important. It was a ascending triangle. We drew it as a couple different ways, and you'll see it on the daily time frame. But right now, we'll keep an eye on that as being our major point of support. And coming into next week, we have the 100-week, or excuse me, the 20-week moving average that we're coming into right now. All right, we'll pull up just a couple indicators. On the weekly time frame, we just want to pull up maybe just this one here for the options tender. And you see that we had this uptrend on the RSI. We're breaking that uptrend. We had our bearish divergence. That's a sell signal right here. We're breaking the uptrend. We now have a possible crossover on the bearish side. So we can add in this sell signal right here, change that red. So we're looking for the MACD to get a bearish crossover on this weekly time frame. I think we might get that that next week if we have a down week next week as well. Now, that said, with us being right at the zero line, we could be looking at, with the histogram being right at the zero, and we're just now coming to the point, we might get our bounce. So we are looking for a reversal. We're looking for a temporary reversal. I don't think we're quite there yet, but I don't think the week will end lower. We might have some sort of doji or something like that at the 100 and end off the week with possible doji, a pause candle. All right, so same thing on the stochastic here. You had the that sell signal. You had the bearish divergence. We crossed over this 80 line. That was our sell signal on the weekly time frame, and so we got our continuation there. Okay, moving on the daily, we're going to spend a little bit more time on the daily time frame. Trend is our friend, so we'll start off, since we already have the indicators up here. You see the ascending triangle right there. We'll pull up the picture a little bit better, but we had our bearish crossover here. You see the histogram start to expand, so the momentum is starting to head down faster at this point. I'm going to change this to red just to be consistent there. And on the RSI, we're getting to this oversold area. It's a condition that we have, so it's possible. We did get a little bit of a bounce today. It's possible that we start the bounce, the larger bounce or counter trend price action next week. It's possible that we start from here, but it's not a convincing a reversal type candle, but this is a signal that we're in that condition where we're oversold. We're down in that like 13 area. I don't have the precise number yet, but we're down, really down, oversold. And all that means is that we're in a condition that we may reverse pretty soon here. And you can see that's kind of, we're in this downtrend that's kind of confirmed by the stochastic here as well. But on the daily time frame, we're not getting that crossover, and surely we're not at this, we're not crossing the 20 line as well. So on the daily time frame, we're not confirming any sort of bullish crossover or bounce to the upside. And so we'll continue to look for possibly one more low or two, 1 or 2 days to the downside, which would kind of bring us right into that weekly time frame where we get the Monday follow through with the bearish conditions, and then Tuesday being the turnaround Tuesday. So if we look at this, if we bring out the board just a little bit larger, you see we're not really at, we're not hitting. Sure, we did get some buyers in here, but we have this 43, 26, 25 area where we should get a little bit of support there. But the major support is underneath at the 4,300. So that's a little bit more important down here. So that's why I think that we should actually get down to this area here and find much more buyers before a significant bounce. It's possible we actually start going lower to the trend line, but that's much, much lower. That's almost 100 points lower than there. But we have the 100-day simple moving average right at our support line at the 4,300. It's also a big round number. So those all matter in confluence for a bounce. And so let's go ahead and put on the Elliott wave picture. Let's put on that board so we can see also what's at that 4,300 zone. And it just so happens that our prior 61.8 retracement to the upside from all-time highs is at the 4,311. So right in that 4,300 area, that's going to give us, again, another sort of support. Ultimately, if you look down further, whether we get a bounce here or not, let me move this where it should be. I'm looking for wave 1 here since we're on the Elliott wave, but I'm really looking for a nice big support area at this 50% and this 40 4150 to 4200 area. That's going to be a much larger support area there. But not jumping the gun. All these are not placed in where they're supposed to be. They're just kind of scattered here. So we have our wave one, possible wave one, and we'll see that on the lower time frames, going into this support area around 4,300. That's what we're looking at. And then some sort of bounce to retest, breakdown possible, not the 8 EMA. We're not so on a reversal. A true reversal, we should probably pass that 8 EMA. It's typical that you trend with the 8 EMA on the wave sequence down that you're in. Once the sequence is over, we should break through the 8 EMA. We should possibly retest that 50-day moving average. That will bring us right into resistance here at about the 4450 and also the 50-day moving average. And by the time we get up to that point, this 20-day moving average should probably be around that same area, if not just a little bit off from there. So I think it's safe to say that we have we can put our wave 2 there. So this is all speculation on where it could be. So it just depends on where we bounce, where we have our reversal. This is not a for sure of where these are going to end up. Okay, so if you take the top and assuming that we get a bounce off that 4311, 4300 area, then we should see at least a 50% retracement. And you see that's right where that wave 2, I have that wave 2 on there, and that's the 50-day moving average in that resistance zone there as well. Now, the 618 retracement is much deeper. This type of move that I'm looking for, I'm not sure we're going to make it that high, but we will be ready for any price action up there. It's also the 4,500 area, and that's going to be a good resistance zone as well if we happen to pop up into that zone. And looking further out, let me just move this back here. Looking further out, what we have here after our wave 1 move to the downside, or A, this is a larger A, this bottom here in October of last year. There you go. You can see it right there. And then we had an ABC up for wave W, wave X, and then an ABC up for a wave Y. All that's saying is that it's a zigzag plus a zigzag, which gives you a WXY. This is just a simple retracement. There's ways that you can draw it to where you say that this whole thing is a zigzag itself, but that's how I'm having it right there. This could be a 5 and then a big 3 B wave there and a 5 wave move up. I think I have that on SPY as well. But going into the 786 retracement, we got our reversal. This price action here that we had is just completely just flattened out. It's so steep, it's not sustainable. It's a lot different than what we thought. We thought we might have got a 1-2-1-2 and just kind of setting up for a really big move to the downside. But what it's doing is just extending. It's very extensive. We're going to get down there, nice large, about 6 to 7% move to the downside. And we should see an exhaustion candle, some sort of reversal candle to give us a move back to the upside just for a counter trend. And like I said, it doesn't have to be very deep. It'll probably be rapid. There's no telling what kind of time frame. I'm going to say within 2 weeks, but that, moves like this can be 3, 4, 5 days. So if you look at this steep move here, you have this nice wave 1, and then you have the reversal candle. So we'll count that one. 1, 2, 3, 4, 5, just gapping up 5 days in a row to the upside and then just smash to the downside. So that's possible. And then this wave 1 here, you simply have 2 days and you moved into all these moving averages and just fell from there. So there's no real telling. So you got to play some possible strategies like our in-out spread. There's a video on that if you want to take a look. I'll put a link to it. And I'd like to take a second just to help us with this video. Don't forget to like, and go ahead and comment on there if you want to see anything else. If there's something missing on the major market or individual stocks, if you'd like to see those as well, I don't mind taking any requests and putting them on this video, or maybe making a separate video. Okay, so again, what we're looking for is just to move into this probably 100-day moving average, which would have to do with this 618 retracement. And I'm not going to put this, I'm not going to go through that whole SPY. I have a lot of this other technical analysis that I have on the SPY, but we'll save that for the Patreon page as well. But if you look at the wave 1, if this is a possible wave 1 going into wave 2, then we have the 1618 extension right here. Okay, and just keep that in mind right now. I'm just going to point that out right now. We have that extension, so we have another little bit to go, and that just so happens to line right up with that 618 retracement. Again, the 618 retracement is from the all-time highs all the way to the lows of October in 2022, and that was a good resistance spot, support, resistance, and this is also support too. It's a zone. It's not just this little line, this perfect number. So we got support off of it at this point as well, and then lifted higher. So we're looking, although we're not quite there, these are zones, but that's kind of a wide zone. I just don't think we got there yet. And markets don't typically reverse on Fridays. So I know that we had a up day here on Friday, but I think we'll continue to the downside going early into next week, and we should probably hit this point, and that may or may not, and you'll see why later, this may or may not be the end of wave 1. Wave 1 might actually be lower, and I'll show you how and why and how we can navigate that as well. Okay, before we end off on this Elliott wave screen here, I'm going to put up a study that TD Ameritrade or Thinkorswim offers. It's the Elliott oscillator. So I'm going to put this on the screen. I have this on my screen, on a different screen at all times. So I'm just showing you this one because we have a oscillator here. You saw that we made a high at this point, consolidated, and made another higher high and a lower high on the oscillator. The only thing that the oscillator is telling us is that this might be a wave 5 ending. This might be another way to look at the end of a trend. Okay, so we're far from that. We're just now getting into the bearish territory. And, some of the bulls are going to say, well, I mean, we can continue to go up. You go in this bearish territory, and we start to go up from there. So some people are looking at this this area here as being a support zone for price action to continue a bullish move. Okay, so if we have the retracement, I'm going to move this retracement that we have here, and I'm going to move this retracement to the bottom of this possible wave 1 into wave 2 into wave 3. If you're a bull, that's what you're looking at, that this is a full wave 3 into here. And move this all the way up to the top, adjust this. And so what do you get? Sorry, this should go. If this is a wave 1, then you have an ABC, and this would be the bottom of wave 3. So you notice that now we have this 382 retracement that coincides with this 618 retracement. What am I saying? At the bottom, this whole move here, if you count that as wave 3, so from the bottom of this wave 3 to the top of the wave 3, we have a 40% retracement. That 382, that's a typical pullback for wave 4. So if this is wave 3 and you're pulling back to wave 4, you should continue on to wave 5 to make higher highs at this point. Okay, I will leave that on there because that's again, point of confluence. That's where some bulls are going to come in. They're going to say, hey, we're ready to move to new highs and possibly all-time highs, or form a double top with the all-time highs up here. And that's what the argument is going to be. I don't think that's the case, but this is going to give a good area that possibly wave 1 would end at. We get our impulsive move for a wave 2. If you get a wave 1 down here, it's very common. You can look this up. I'm not going to go too far into it. It's very common to get a zigzag, a 5-3-5 pullback for wave 2. It's very impulsive. You get a 5-wave impulsive move, a little bit of a retracement, and a 5-wave impulsive move up right into resistance, and then you fall from there to continue the trend to the downside. Now that's very common for a wave 2. It happens very sharp, very quickly, just like this one. So wave 2 right here, 5-3-5, boom, 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 and we continue the downtrend from there. Okay, so there will be a real important pivot point here at that 618 retracement. Also, the 50% retracement, that zone in between this 20 and 50 right here. So this will be a real big zone, whether we move up for new highs or continue the trend to the downside. All right, and let's see if we can see. We'll take this study off here and let's remove. All right, let's see if we can check out any oscillators. So let's change the board here. Let's go back to trend is our friend. Pull out the McClellan oscillator. You notice we are deep into oversold territory. So once again, we're getting into that zone to where we should probably see, we don't have any divergence, but we should probably see some sort of reversal soon. And if we get a little bit at lower price action, maybe this oscillator still rises a bit and gives us a signal to go long into next week. And so we'll be looking out for that. We can also look at the summation, and that's very important because you see this trend line that we drew here. What did we say? We said in the earlier videos that we have our lower high here. We're going down to this pivot point, and we're gonna triangulate. We've come into an equilibrium, right into that bull bear pivot. Sure, we can just continue to go further down. I don't think that's the case. I think we're going to give an opportunity for the bulls to think that we're going to go to higher highs, but we're going to oscillate into here before breaking down. That is speculation. We're going to have to watch to see what happens, but that's the path forward that I'm looking at right now. All right, one more. See if we can pull up here. All right, so we have our Bollinger Bands. We had 2 touches on the Bollinger Band, made our reversal with negative divergence, pulling to the downside. Again, we broke back down from this trend line here. So very bearish. It's a fake break. Coming into support. There's nothing really on this screen holding us back, large major support until we get down to these lower levels at 4,200 or so. But things are, we're going to start trending to the upside. The ADX is down because we made our reversal. But as soon as if you see our price action move up and make a lower high and start continuing to downside, you're going to see this ADX actually move back to the upside and getting to a more trend mode. Right now, this is a counter trend according to the indicator, and then we should trend to the upside. But you see the momentum heading down, indicators, the histogram moving down, meaning that we have nice wide room between the leader line and the MACD line. So that continues to be momentum bearish, but we are at the 0 area. So again, when you come up to the, you come up on the indicators, although it does pass through the 0 line, that usually acts as a pretty good zone for at least a bounce. This one, this was a hectic move here. So there was no real bounce. We got down to past the 0 line, tried to attempt to cross over, was denied, and kept continuing to the downside. Same thing here. Nice big move. Never crossed back over until it was time for a bounce. So here, this measly little bounce that we'll have here, possibly 75, 100 point bounce that we might have here, might just be backtesting and then continue the trend to the downside. That's what it appears like when you have a larger trend. We are looking for a much larger move. All right, so let's go down to the 65-minute. Want to check out the Elliott wave on the 65-minute. Let's get the indicators out of here. And the histogram is what I want to bring back up with the Elliott wave, the oscillator. Again, this is something I looked at on a day-to-day basis. So what says, that we can't move further down? It looks like we're forming a bear flag right here, and then that might have continuation to the downside. But this histogram is telling us, hey, yeah, we had some divergence, positive, and then we corrected, and then we had that big move to the downside, and that actually burned that divergence, so this no longer matters. And then we'll be looking on the next move down, probably into that 4,300 area. This histogram will be lower and will be forming another positive divergence, signaling that we might have the end of that trend. But let's go over to the SPY on the 65-minute time frame, and then we'll put on our Elliott wave, and I'll show you exactly what kind of pathway I'm looking for going into next week. Okay, so we have, I'm going to move down here just a little bit, make this a little bit more clear. Okay, so we have I posted this on Twitter and on YouTube as well, so you can follow those links. All the links and stuff are in the description. So we have our wave 1, 2, 3, 4, and possibly to finish wave 5. So in this, after wave 4 here, you have the wave 1, 2. Wave 3 cannot be the shortest, which it's already longer than wave 1. So this fits the Elliott wave rules to where we had 4 ending here. And now we have 1, 2, 3, possible end of 3. We're looking at a 40% retracement. We are at the minimum right now at the 23.6. Possibly we go a little bit higher into next week and then fall down to the 429 area, which is equivalent to where I was talking about on the SPX. And that happens to fall into some time areas on the 23rd. That's Wednesday the 23rd. And we also have a couple more time frames on the daily and on the 65 that is on Friday, the 28th of next week. So any of those points that's kind of confluence of where time and price may come together. So that's something that we look out for. If we hit this zone and price is also agrees with it, then it looks like we may have a possible bounce. Now, what happens when we hit the zone? We're looking for a bounce either way, whether you're bull or bear. But there's 2 bearish scenarios that I'm looking at. The bullish we'll have to, if we get on top of the 786, we'll consider ourselves bullish at that point. But as a bearish comp, we're looking for a bounce for an A, 5-wave move up, B, 3-wave move down, and then a C, 5-wave move up. Not necessarily in this time frame or price action, but this is a 61.8 retracement zone right here in the 448. So I'll be looking for some sort of retracement into the 50-60% zone, or we may have to move our count if we get it more shallow bounce here, and then we continue to the downside, that will be a 382 retracement from wave 4. Okay, that's a 40% retracement from down here from wave 4. Retrace 40% and can continue to the downside for one more possible move. And that might bring us into the 50% retracement there. So we'll have to move the count 1 degree up. And this would be wave 3 down here. This would be wave 4, the bounce for wave 4. So what we would get at this point is possibly that all of this was a wave 1. 1, 2, 3, 4, ending diagonal 5 into 1. 3-wave move up to 2, and then 1, 2, 3, 4, 5 into 3, and then 4, a 3-wave move up to 4. And remember, 4s aren't fun. They could be anything. They could be diagonals, flats. They could be a zigzag. They could be anything. And so they usually take a lot of time because zigzags, the rule of alternation brings us from something sharp, a sharp pullback, into something usually larger, more time consuming. Okay, just for the moving averages to catch up. So this would be our wave 5 down here. That's our alternate move. We do think that we'll get one more move down and start with our correction to the upside. And we'll know that when we get into this point. I have this as the 40% retracement from possible wave 2 down to 3, and a 40% to wave 4 would be right here at about the 438. So you get on top of that 438, and then you can expect much more. You'll still get a retracement back down, but you'll have a buying opportunity to go back up at that point. So you get past this 40%, 50% is still valid, but it's just very unusual. So that's all about probabilities, and probability has it if you get above this 40% that you're probably done with this wave count, and that we're going to see much higher pullback before heading much lower there, instead of 2 more waves to the downside. All right, I hope that's clear. We're going to, again, look for this histogram on the Elliott oscillator to give us a bearish divergence on this move here. I think this move is very probable. We are in this trade right now into next week. We look at forward to hitting this bounce, and we will play the bounce. The bounce is a very high probability play no matter what, but don't overstay your welcome into this bounce. Take profits as you go, and then look for to see if we can make a higher low into a higher move there, or if we break down for one last move. All right, that's all I got for you. I hope this helps out. Don't forget to like the video. Let me know your feedback, and we will talk to you soon. Have a great weekend.